Hey there, and welcome to The Explainer. We're going to talk about something that can feel, well, kind of mysterious, maybe even a little stressful, and that's your credit score. So let's just dive right in and break down how you can actually take control and start seeing that number go up.
So let me just ask you this straight up. Have you ever felt like your credit score is just holding you back? Maybe it's the thing stopping you from getting the car you really need, or that apartment you've had your eye on, or even just getting a decent interest rate. If any of that sounds familiar, you are absolutely in the right place. Okay, before we get into the nitty-gritty, let's kind of shift our thinking here. A credit score isn't some grade stamped on a report card for life. Think of it more like a key. Seriously, a better score unlocks better rates, gives you more options, and at the end of the day, that means more financial freedom. It's a tool, and it's one you can build and sharpen over time. So here's how we're going to break this all down. I've got it split into three main parts for you. First, we'll cover the fundamentals, the stuff everyone has to get right. Then, we'll look at some accelerators, ways to speed things up a bit. And finally, we'll talk about the builders, for anyone who's starting fresh or maybe needs to rebuild. Sound good? Let's jump in.
Okay, first up, the fundamentals. I want you to think of these like your daily workout at the financial gym. They might not be the most glamorous things in the world, but man, they are absolutely crucial for building that strong foundation.
Look, if you take away only one single thing from this, let it be this: pay every bill on time. I'm not kidding. Your payment history, it is the heavyweight champion when it comes to your credit score. It's the biggest piece of the pie. Even just one late payment can knock your score down significantly. So, do yourself a huge favor and set up automatic payments. It's probably one of the smartest, easiest moves you can make. All right, the second big fundamental is something called credit utilization. Sounds kind of technical, but all it really means is what percentage of your available credit are you actually using right now? And here's the magic number you need to remember: 30%. The golden rule is to keep your usage below that 30% mark. So, for example, if you've got a $10,000 credit limit, you want to try and keep your balance under $3,000. And why is that? Well, because when lenders see you're using a ton of your available credit, they see that as a sign of financial stress. Keeping that number low just shows them you're managing your debt well. So, okay, how do you actually keep that number down? Well, there are two really great ways to do it. The first one is pretty obvious, right? Pay down your balances. But the second one is a real pro tip. Make a few smaller payments throughout the month. So instead of just waiting for that one big due date, maybe you make a big purchase, and then a few days later, you pay off a chunk of it. That helps keep your utilization low all month long. All right, so we've got that foundation laid. Now, let's move on to part two, the accelerators. Think of these as the more strategic moves you can make if you want to see progress happen, well, a little faster. Now, this one is huge, and honestly, a lot of people just totally miss it. Your credit reports can, and often do, have errors on them, and those little mistakes could be costing you precious points. The process is actually pretty straightforward. First, you get your reports. Second, you review them really carefully for anything that just doesn't look right. And third, if you spot something, you file a dispute. It's your information, and you have every right to make sure it's 100% accurate. And hey, don't go paying for these reports. Here's where you get them for free. If you're in the US, the official place to go is annualcreditreport.com. That's where you get your free yearly reports from all three big bureaus. And for our Canadian viewers, services like Credit Karma will give you free access. Seriously, bookmark these sites and go check them out as soon as we're done here. Okay, so when you're looking at your credit report, you might see this term, hard inquiry. Don't let it scare you. All that means is an official check of your credit that happens whenever you apply for something new, like a new credit card or a loan. And here's why that matters. The key is to be strategic. See, one hard inquiry here and there, not a big deal. But a whole bunch of them in a short period of time, that can look like a red flag to lenders. It kind of makes it seem like you're desperate for money, and that signals risk. So just be smart about it. Space out your applications and really only apply for the credit you actually need. And that brings us to our third and final section, the builders. This part is all about the tools that are specifically designed for folks who either have a very limited credit history or are maybe working on rebuilding a score that's taken a hit. Okay, one potential shortcut here is becoming an authorized user on someone else's credit card. Let's say a family member has amazing credit and they add you to their account. Their great payment history can give your score a pretty serious boost. But, and this is a huge but, it's a two-way street and you need to have total trust. If they miss a payment or run up a huge balance, that's going to hurt your score too. So you have to choose this person very, very wisely.
Now, if you're building credit from square one, a secured credit card is one of the best tools out there. Here's how it works. You put down a small cash deposit, maybe something like $300, and that deposit becomes your credit limit. It's a really low-risk way for the bank to give you a chance to prove you can handle credit responsibly. And it's not just about credit cards. You can actually build credit with payments you're probably already making. There are services now that can report your on-time rent payments to the credit bureaus. It's also worth a shot to just ask your utility providers if they offer something similar. Remember, every little bit of positive payment history helps build that score.
So there you have it. We've gone through the fundamentals, the accelerators, and the builders. That's pretty much the playbook. But you know what? Knowing the plan is one thing. The most important part is actually turning that plan into action.
Let's be real for a second, though. It's so important to have the right mindset about this. One of our sources said it perfectly. Building a strong credit score takes time and consistent effort. There's no instant fix. And that's the truth. This is a marathon, not a sprint. It's all about building those good habits over time. But hey, please don't let that discourage you, because every marathon starts with just one step, right? The most important thing you can possibly do is to not get overwhelmed by everything. Just focus on starting with one small, manageable action, and start today. So I want to leave you with a question. Out of all the things we just talked about, checking your report, setting up an auto payment, chipping away at a balance, what is the one real, tangible step you're going to take this week? What's that first move you'll make to start building that key to your financial future?